News. Now, as we know, the people of the UK, they voted to leave the EU, and they voted on it, and they're supposed to be negotiating on how to leave. And we know that the central banks, they're not going to let this happen. And we know that usually the government of countries, they also don't listen to the people. And we actually see this happening in the UK. The upper house in Britain has overruled the people trying to keep the UK in the EU, which would destroy the British economy. The upper house of Parliament back calls to remain in the EU customs union after Brexit. The House of Lords voted 348 to 225 to amend the government's EU withdrawal bill in a real insane move. This will now return to the House of Commons, where the defeat is likely to spur renewed opposition to the whole Brexit issue. Now, this amendment would now require the government to report to Parliament by October 31st on exactly what steps it has to take to remain in the customs union. By tinkering with free trade portion, they are disrupting the entire process and laying the seeds to overturn the Brexit entirely. And we can see right now that this is what normally happens. The establishment pushes back. I mean, we saw it in Greece when the people voted for Tsipras, and Tsipras says, no more deals with, the central bankers, and don't worry, we're going to put people back to work. And actually, the opposite happened. He turned on the people and made deals with the central banks. And we can see the same thing is happening in the UK. So we'll have to watch this to see how this goes. But again, the people voted. They didn't want to be part of the EU. And they decided, something? We voted to remove ourselves. And the government, they are not listening to the people. And you know what happens to governments that don't listen to the people? The people finally get pushed back into a corner and the people react. I mean, we've seen this in history time and time again. Now, out in Canada, we are seeing that the Canadians, they just set a new record for borrowing against their homes. And this is not a very good sign. This is coming from the Office of the Superintendent of Financial Institutions, which shows that, yes, after a brief decline in January, the balance of loans secured by residential real estate hit a new high in February. More interesting is the segment of loans being used for personal consumption is growing at the fastest pace in years. And basically, they're using their homes. People used over $283 billion in home equity to secure loans. Now, this is at an all-time high right now. And what's very interesting about all of this is that people are taking out loans on their houses. The houses are at a certain value right now, and that value is dropping. You know what happens. It puts people underwater as the value continually drops. And this is what we're going to see because the real estate market right now is just getting worse. In Toronto, we have seen a 39.5% decline in sales over the last year, with prices down by 14% and falling really fast. The bubbles are popping right now. The average price of a house is down around $915,000 to $785,000. That's huge. And this is just going to accelerate to the downside. London real estate prices have fallen by 2.6% year over year. And if we look in Miami, guess what? Luxury condos in Miami Beach, Bal Harbour, Sunny Isle, they're all falling. They're declining. All these signs point to the beginning of the end of this real estate bubble. The real estate storm is now hitting the severe stage. And moving forward, guess what? Things are just going to rapidly fall apart. And we're seeing a lot of these indicators right now, where we're seeing bubbles pop, where people are doing the same thing they've done back in 2008, where they're thinking that everything is great because most of the people listen to the corporate media and they think, whoa, housing prices are just going to keep continually moving up and up and up. The stock market's just going to continually moving up. Everything's going to be great. And before you know it, they're taking out loans, they're investing more into the market, and everything completely falls apart. These are illusionary bubbles that the central banks create to bring people in. It's like moths flying towards light. This is the same thing. They want everyone in. So the big investors who pump these bubbles up, they get out. The small little people get in, and they bring the market down. And all those people that got in, those are the people that are hurt. All those people that pumped up the bubbles, they make out. This is how they work time and time again. And they don't care about who they hurt, who goes bankrupt, who loses their savings. It's meaningless to them because their system is based on profits. It's a corporation. They're not doing it for the benefit of the people. They're doing it for the benefit of themselves. Now, Trump is out there and he shot down the TPP. He said, yeah, I looked at it. It can't be reworked. It's meant for a globalist society. We're going with the bilateral trade deals. He's meeting with Abe, and they pretty much couldn't agree on much, but they did agree on trade. And Trump right now is sticking to the bilateral trade agreement. And I believe this is the right course right now because it keeps everything diversified. If we have a problem with trade with this country, it doesn't affect trade with another country. If you're in the TPP and things go wrong, it affects almost everything. But this is what the globalists wanted. Remember, they wanted a one world government, one currency, all countries at the same playing level. They wanted everything exactly the same. But we can see it's all being dismantled right now. That's the whole point of all of this. It's all being dismantled, all being set up for the major transition. Now, the central bankers, they know that the system's going to be coming down. The central bankers know exactly what is happening because they're the ones who create it. They're the ones who can control it. And they know what happens. And they know how to prepare for all these things. They know what buttons to push to make sure that they can get some bailouts or some bail-ins. Well, right now, the European Commission gave its blessing to a plan proposed by Italian authorities to liquidate small trouble banks in Italy with total assets of less than 3 billion euros. Under the plan, as a failing bank is resolved, its assets and its liabilities will be transferred to another lender under national insolvency proceedings. When liabilities, including deposits, exceed the value of the good assets, mostly loans, the gap would be dealt with by giving haircuts to unsecured creditors, including insured depositors, who would then be made whole by a respective national deposit guaranteed fund and by mobilizing taxpayers. Now, let's look at this for a second. By National Deposit Guaranteed Fund. It's almost like the FDIC. Now, the new resolution plan will be available not only for the Italian banks, but for the Eurozone member states. And each one will have an option to set up schemes to support this orderly exit of small failing banks. Now, the last time the European Banking Authority checked, at the end of 2016, Italy, like Ireland and the Netherlands, had guaranteed funds equivalent to just 0.1% of covered deposits. In Spain, the figure is around 0.2%. In France and Germany, it was around like 0.3%. All EU bank deposits are guaranteed up to €100,000, regardless of how much is in member state funds. Senior bondholders are also protected from any financial fallout. But if a large enough bank collapses in a disorderly enough fashion, trying to plug this massive financial hole it leaves behind can suddenly become a very difficult task. And we've seen this in Italy, we've seen it in Spain, and we've seen it in many other countries. The problem with this is that if things go south, there's not going to be enough in the guaranteed fund. And we can see, yes, they're trying to prepare for this. They're trying to prepare for a disaster scenario, but it's not going to work. They don't have enough money. And what they think is going to happen is maybe 1 or 2 banks or 3 banks will go, and they'll be able to stop it before there's a domino effect. But as we know, most of these banks are completely insolvent, and most of these banks are going to go under, and they won't be able to stop it because when the ball gets rolling, guess what? It's going to get completely out of control. So what do they do at that point? Once the guaranteed fund is all used up, they're going to shut down the banks, close everything down. It's going to hit the United States. The banks are going to shut down here too. Most of the world that are in the private Western bank control, those banks are going to close down. And most of the governments, well, they're not going to bail out these banks. This is why they have the bail-in documents. They're preparing for this collapse scenario. So what they'll do is they'll shut down the banks. They'll tell everyone, listen, you cannot withdraw any of your money. Right now, we're putting restrictions on everyone's accounts. You can go to the ATM and take out maybe $200. That's it. You can transfer it to other banks, but you cannot withdraw your cash because the cash is not yours. And what we'll do is we're going to take some of your cash that are in these accounts and we're going to use it to prop up the failing bank. That's the key word, the failing bank. And what we'll do is we'll put a piece of paper in your account, of course it'll be electronic, saying that we owe you this money, I owe you, once the bank is prosperous once again. And you know that these banks are going to completely collapse on themselves. And you're never, ever going to see those funds. They did a test in Cyprus to see how people reacted. And the test went pretty well for the bankers. Greece, it was a little bit more difficult because the people realized what happened in Cyprus. They ran to the banks when their country was declining very, very rapidly at one point. And a lot of people started to withdraw their funds before it happened, which made the bail-ins very difficult. So what we're seeing right now is the central bankers, they are planning for this major collapse scenario. We see the United States is preparing for a collapse, a transition, and everything is being reworked to accommodate the new system. And once again, you need to be prepared and ready for what is coming because, again, if you can't get your funds out of the bank, and there's a bank holiday, that's what they call it, and they say you can take out $200 a week or $300 a week, and that's all you can take out, and your actual currency in the bank is gone, or maybe you only have half of it, maybe you only have a quarter of it, they can actually take out the rest as an IOU. What are you going to do? This is why we've been saying for the longest time, make sure you have cash on hand. Make sure you have gold, silver to ensure your wealth. You can have cryptocurrencies, which you can move around. A lot of the stores, a lot of the online stores, they are starting to accept cryptocurrency. Of course, the central banks are trying to shut the crypto market down. They're trying to regulate it. They're trying to control it. But once again, it's going to be very, very difficult because as the technology evolves, they won't be able to control it because it's not centralized. Everything is not in the United States. Even the exchanges will be decentralized around the world. So regulation is going to be very, very difficult. And this is why the central bank, the only way they can do it is to get every single country in the world to have pretty much the same type of regulations. But those countries that aren't under the private Western central bank rule, this is going to be a little difficult because they might not agree with it. And then once again, you can't control it. So it's going to be very, very difficult. If this was a one world currency, globalist type of system, yes, they would have control over all of it. But because they are not in control and they don't have this system right now, it's going to be a lot more difficult. So we're heading towards this transition. The central bankers are preparing themselves. Everyone is getting prepared. The economy is declining very, very rapidly. We're even hearing financial pundits out there saying the economy is not doing as well as they thought. We know that the Fed is very worried about the tariffs. We know the IMF is very worried about this. So you could see where this is all headed, and you can see that the game is who's going to control the narrative in the end. Whoever can force the other to collapse the economy and make it look like it was their fault, they control the narrative. And I brought that example up from 1971 when the central bankers had control of everything. They were able to control the narrative, saying that, yeah, the reason why we have a gas shortage, the reason why you can't find jobs, it's because there's no fuel. It has nothing to do with us coming off the gold standard and going on to the petrodollar. They didn't even mention that. Of course, they said we're coming off the gold standard because of speculators, and then they made up stories of why you couldn't get fuel, why it was very difficult to get jobs, why it was very difficult to do anything at that point. In other countries, it was even more difficult. So whoever controls the narrative, they'll control what happens next.